Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. We're going to jump right into the mortgage bonds this morning. It's going to be 2 days in a row that mortgage bonds have opened up higher than the previous day. Yesterday, mortgage bonds opened up higher. This morning, mortgage bonds in the morning session opened up much higher, about 49 basis points higher, and then pretty quickly lost that, dropped down to about 5 basis points higher over the previous day, and now they're about 45 basis points higher. So they haven't quite caught back up to where they opened this morning during the morning session, but they definitely are higher than they were yesterday and have made some ground, made some movement up since their initial open, then initial loss. Now they're kind of retracing that ground just a little bit. The 10-year yield is down about 7 basis points today, and that marks 2 days in a row where the 10-year yield is down, and the 10-year yield is down. And that really, what that means for mortgage interest rates is that with all the volatility so far in the market this morning, interest rates should open the same or better than where they closed yesterday. But with the volatility, some lenders that are a little more risk averse may not reprice too much better this morning. They may stay a little bit cautious. When you see volatility like that, it could really go either way. It could continue to go up, in which case we'll see some repricing for the better, or it could drop and lose all the gains, and then we'll see some repricing for the worst. So, more risk-averse lenders are going to keep their pricing conservative opening up today. But as a whole, we should see prices open up a little bit better today from where they were yesterday, with some possibility to reprice for the better throughout the day. Now, again, I've been talking about it for a few days and throughout the week last week. It definitely feels like we're starting to build a foundation on the mortgage bond where we could possibly start moving towards the better as far as interest rates. Now that, that's happened 2 days in a row now. Whether or not this is a long-term thing is yet to be seen. But what we're really kind of seeing right now is that in the marketplace as a whole, people are, investors are really starting to hedge against or price in the inflation data that's going to be coming out later this week, and then the Fed's announcement that's going to be coming out next week. Now, everybody's expecting a 50 basis point rate hike in the Fed fund rate, and so everybody's kind of pricing that in and positioning themselves for the inflation news later this week, and then that Fed fund rate announcement next week. And as such, during the overnight trading and then coming into the morning, oil was down, stocks were down, bonds were down, European Union bonds were down. Since then, the oil's kind of rebounded a little bit, but stocks and the bonds are still lower. And again, it's mostly looking like it's that pricing in the news for later this week and next week about inflation data and the fund. So what we're starting to see really is mortgage bonds become the beneficiary of some of this fight against inflation that we've been talking about. We're starting to see it just a little bit. Again, we're not at a long-term trend yet, but it looks like we could be moving in a positive direction. Now, there was a lot of news that came out this morning as far as manufacturing indexes and things like that. Most of that news was favorable, but not necessarily enough to move the market one way or the other. And so that's kind of what today's news so far has been. Later today, FHFA and Case-Shiller will release their price index. It's a house price index and a home price index, respectively. And those are going to give us some insights into home values and home prices over the past month from a year-over-year basis. And should be some interesting data in there. We're going to unpack that data and bring it to you tomorrow in tomorrow's update. But as for now, that's pretty much all we got. If there's anything that comes out, we'll let you know. But so far, again, mortgage bonds up. Just in the time that I've been talking, mortgage bonds have kind of retraced some of their steps. So there's just a lot of volatility in the bond market right now. So whenever it opened, it was at 49 basis points. Whenever I started recording, it was at 44 basis points. Before I started recording, it was at 5 basis points. Now it's at 19. Those are gains from the previous day. And so just a lot of volatility right now. So we'll just see what happens, and we'll keep you updated as the day goes on. Hope you have a great day, and we will see you tomorrow.